Good afternoon. This is Ken Long from Towards Capital with a review of the trade of the day for March 27th, 2013. We started off the morning with a 2-hour trade in XIV, which is the inverse volatility ETF. It had a big gap down. Then in regression, we could see the regression line crossover forming. I should say this is 3-minute candles. And the blue river is the 30-period Bollinger Band on 3-minute charts. The red line is the simple moving average, which marks the middle of that river. The shaded area outside is the lighter blue is the 2 standard deviations plus or minus from that same mean, and we think of that as the floodplain. Thick black is the 30-period regression. Medium blue is the 10-period regression line. The orange line is a 2-period Bollinger Band plus or minus 1. We call it the ribbon. Looks like the real what the proper real body of price is inside each of these bar charts. So instead of using candlesticks that flash alternately red and green, we want to get a sense of what the real price is on a statistical basis, and so using a 2-period Bollinger Band kind of replaces the real body of the bar chart for us and gives us like a pseudo candlestick, which I think is a better reflection of what the real price at that particular moment collapses to. So that's what that looks like. So here was the gap down. It had closed up here, gap down, and then was willing to go in at 22.95 here because we had the gap down, sell off, a couple spiky tails to the bottom here, but the ribbon didn't go with it, so that looked like anomalies, and they were outside of the floodplain, so that's more than 2 standard deviations away from the average. So we got a low and then a higher low, and then as it started approaching the river, I could see the 10-period regression line had already was reversing and was going to make a regression line crossover. And under those kinds of conditions, I'm normally interested in buying when price enters the river, or when the ribbon enters the river. So I was going to be buying around this area anyway, so front run it a little bit with 22.95 with a 20-cent stop down here below the real body of the ribbon, if you will, below the real body swing low. I think of that as it worked, and we added a second position at 23.34 where we got 2R in hand with momentum. Price had left the river. Both regression lines and the ribbons were outside the river, going north. The river had rolled over and was going up, so this is the beginning of trending behavior in this region. Once it had cleared this congestion area, it looked to me like good chance it would come up and close the gap, and so I want to put a second position on, play at least to get to the closing of the gap. We didn't get any follow through. It went sideways for about 20 minutes, rolled over and made a regression line crossover outside the river, and that felt like enough, so cashed it there. So the second position was actually a wash, and then we get 2R on the first position for a net of 2R for that trade. Had things going on, didn't play this side or the reversal. This could have been played on the short side, or with VXX or UVXY. It didn't play that. I was doing other things. But what I was interested in here was this little formation where the regression line crossover, again outside the river. I wasn't able to take that trade. I had other things going on outside of my span of control. But this would be a logical place to have re-entered around 23.04 because what you see is a low, a positive trade, money in hand, the river reversing, at least going sideways now and making a higher low. So a lower low, now a higher low, regression line crossover outside the river, actually the second part of that signal. And then price re-entering the river here is a nice entry. I wasn't available to take it. And then upon observation, we'll see price goes right through the Bollinger Band mean to the top, pulls back, and now this is key. It makes a third low. So this is low number 1, low number 2, low number 3. So that's the higher low, and it found support right at the edge of the river and started taking off again. and cleared the previous little swing high here at the edge of the floodplain. And so once it does that, I'm really interested in that trade. So I'll take that one and get a fill at 23.30. And in this case, I want to give it some room, so I give it a 30-cent initial stop, which would put it just below the river, so a significant move away. And then we're ready for this to make an afternoon run on the basis of we've already cashed a good one this way. There was failure to fail. The river is getting narrower. The trend is up, and we're at least flat and starting to go hook back up, as you can see. And we've got both regression lines and the prices outside the river heading north. So I buy it here with a stop here on the basis of support, 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 and continuing momentum. Now, if it gets, what I'm concerned about is if it gets through this about 23.35-ish, that's the place where you would kind of expect it to fail. But if it doesn't fail there, then it's going to get up here into the 23.50s, and then good chance of going beyond because of the failure to fail here. And then this would look like a strong upside day. And so that's the we're managing that trade now and seeing what we can see. So thanks for your kind attention, and Ken Long from Tortoise Capital with the trade of the day. And keep your powder dry and your risk measured.